You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. Be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it's time for TWIFO. This Week in Futures Options, a program where pretty much the name says it all. We break down the week that was, and indeed still is, in the futures options world. So maybe we'll talk a little crude, a little metals, a little FX, a little ags, a little livestock. You never know what's going to make it on. Crypto, all of the above mixed together. It's a fun show. Check it out live every Thursday, 1:30 p.m. I know the intro says Friday. We'll fix that. But Thursday, 1:30 p.m. Central. Used to be Friday. Now it's Thursdays here. Coming at you for the first time in 2019. My name is Mark Longo, of course, from the old network. And, of course, this is that time of year where everyone's still coming back from the holidays. A lot of holiday travel going on. So my two usual cohorts, Nick and Sean, are both hither and yon, traveling all around the country, bringing kids back to school and whatnot, and coming back from their holiday vacation. So they will be joining us. And, of course, our guests fell ill at the last minute as well. So I'm kicking it off the new year solo here on the old TWIFO. But we got a lot of fun stuff to talk about here on the show. Before we even get into the meat of the show, I want to just look back. You know, we did the last show of last year. Sounds like so long ago, only a week ago. We did last week's show looking back at a lot of the big themes and trends of 2018, but now the numbers are in, and we could tell you for this program in particular what the hot trends were, what you guys were really into in terms of the top 10 TWIFO episodes for 2018. Now, this is just episodes that came out last year. Sometimes archive episodes get a lot of love, too. We're not counting those. We're just counting things that came out last year and what you guys were into. We'll go from the bottom to the top. A little bit of drama there for you. Excuse me. Let's kick it off. Number 10 actually was our show from this time a year ago. It was our number 85, kicking off 2018 with a bang. So that was our kickoff show for 2018. Also a very popular one coming in at number 10 on the old options, TWIFO list over here. Then we moved on a little bit. We go to number 9 is actually Futures TWIFO, This Week in Futures Options, number 95, talking crude, coins, and crypto. That was coming out on March 19th of last year. So as you might imagine, into Q1 there, end of Q1, crypto very big, hot on everyone's mind, starting to come off its peak there from 20,000 that it hit back in December. And so a lot of people had it on their brains. You guys clearly did, excuse me, back then as well with episode 95. Then we go to episode 93, This Week in Futures Options 93 for number 8. That was inverse volatility craziness. That was on the 5th of March. If you remember back last year, February was a crazy time. We saw a lot of madness, particularly in the broad equity space. So the beginning of kind of the pronounced return of volatility, which, as you recall, was our pretty much overall theme for the markets in 2018 here on TWIFO and indeed on the network. VIX came back, volatility came back, and it came back in aggressive fashion. And it kicked off in February. And what happened as a result was, of course, we saw a lot of shakeup, a lot of dust up in the inverse volatility space. A lot of ETPs that played in that space went the way of the dodo or were neutered as a result. So we talked about that a bit on that show, episode 93, Inverse Volatility Craziness. We talked E-minis, volatility, all sorts of fun stuff. Even had some questions, think about lumber there. All sorts of fun stuff. Number 7 was TWIFO 109. That was the trade war hitting equities, ags, and more. That was from July 9th of last year. So the trade war hadn't really kicked off officially yet, but we were still seeing kind of the ramp up to it, the lead up. That's when we were seeing kind of the initial concerns over it, and that was starting to shake the equity market a little bit as well. So we had come off the initial sell-off in Q1. Things had maybe stabilized a little bit. Volatility had maybe stabilized a little bit. Then we saw the trade war talk, and that kind of really exacerbated things and got us back into this cycle that we're kind of in right now of elevated volatility and a lot of uncertainty on the broad macro level. Number 6 was TWIFO 122, The Revenge of Volatility. Guess when that one came out? That came out October 12th of 2018. If you've been listening to the program, you've been paying attention to the markets, you know October 11th was a big day. That was the big sell-off when the worm kind of turned, when the equity market hit a peak and then turned on the 11th. So the 12th, the day after that, that was obviously a big talk. Volatility came roaring back yet again. We had kind of not quite tranquilized a little bit or pacified out there in the vol space. We had certainly plateaued, and then October 11th really kicked it off again. In fact, if you listen to our rundown from the option block in terms of the overall option space, that was actually the most active day of the year, October 11th. It beat out February 5th and 6th in that time frame there. So that was a very active day, and that was on our minds back on TWIFO 122, but it was only our number 6 episode for the year. Number 5 was episode 90, The Revenge of Volatility, from, guess when? February 12th. It's similar. I'm sensing a theme here, where you like the October 12th talking about vol, and then you talk about it the week after the big Febocalypse again as well. That was when we had Revenge of Volatility twice last year on the show. So that was definitely thematic. And February 12th, so of course the week after the big Febocalypse, VIX-ocalypse, call it what you will, out there in equities land. Number 4, going up the list here. Number 4, TWIFO 100, the volatile and controversial world of ags. This is from April of last year. This is where we sat down with the folks of Makuna, I believe, on the show and did our first real deep dive into ags for last year. That was a hot topic, of course. Remember, ags, in particular, soybeans, were ground zero for all things trade war. I mean, that's China's biggest import from us. That's our biggest export to China. So what happened with soybeans, that was kind of seen as a barometer for the trade war, and that was our first real deep dive. And I think at the time, if I recall correctly, that was when the beans had first really kind of broken through, or were threatening to break through 1,000 to the downside. Of course, we're well below that now, but that was where the ag kind of volatility was starting to really shake out, and that was on April 30th. Of last year, so going into early summer there. Number 3, TWIFO 84. That was our big 2017 wrap-up palooza, which was almost exactly a year ago. So we did our wrap-up in the beginning of the year for the last year, and that was very popular. Number 3 for you guys over there on the year. Number 2, TWIFO 117, a deep dive into equity, volume, and volatility. Interesting timing, September 7th. It wasn't coming off the heels of a tumultuous shakeup in the equity market like it was in October or indeed in February. You guys really enjoyed that one. I believe we had our friends from Russell really kicking into high gear on that show as well. In fact, I could pull it up here and we could see exactly. You can go to theoptionsinsider.com to find it for yourself, listeners. Yeah, we talked a lot of Russell and E-mini on that show. I also had some questions even about crypto back then, and all sorts of other fun stuff on that program. We asked you, which major crypto product would you like to see listed on a major venue next at that show? And a lot of you said Bitcoin options. Go figure. So that one hot and heavy, number 2. And number 1, the biggest TWIFO program of the year, most popular, the one you guys downloaded and streamed en masse and continued to do so, was episode 116, Metals, Energy, and Hedging Equities with Treasury Options. That was from, August 24th of last year. That was, let's see, episode 116, there we go, 117. That was an interesting one here for us, and a hot one clearly for you guys. I'm pulling up the show notes here as we speak. We have that poll. Again, crude, equities, and Bitcoin were kind of the topics of the day. Had some requests for hog love on the show there as well. But a hot one over there in Treasury options land. So yeah, number 1 with the bullet. August 24th episode, TWIFO 116. Let's see what it will be for this year. If last year is any indication, then this show should be a pretty popular one as well. So let's get right into it. Getting with the crude. We like to get crude here on the show, so we'll do so again here on the program. Oil and crude land and interesting stuff. By the way, of course, you guys can play along, as always, the home game available, cmegroup.com/TWIFO, TWIFO. That's where you can play along with the freebie version of Quick Strike and kind of see the reports I'm talking about. If you want to level up your game, though, you want to get using the Power Pro Tools, then head on over to bandtix.com or quickstrike.net. Remember, that's QUIKSTRIKE.net, where you could log in, sign up for a free trial of the Pro Tools. And that's, again, if you're trading this stuff, if you're watching this stuff, I know a lot more of you are every year, then that's something that you really need to be using. And I'm talking to Nick about, they got some reasonable options coming even for you retail guys out there too. So price-wise, I think you mentioned on the last show, it's certainly going to blow the heck out of a Bloomberg. But even if you're not on that institutional side looking to pay for high top dollar stuff, it still is fairly attractive. So we'll look. I think it's going to have some new offers for you guys coming soon too. So stay tuned for that. Meanwhile, of course, let's get into what's cooking in OPEC land and crude land. Ken's OPEC crude kind of move hand in hand. Right now, crude up on the week, about a handle right around the 46.5 level right now. We're seeing volume-wise, fairly quiet week again. First week back from the holiday, not exactly a lot surprising there. Open interest up about 1.6% on the week. We're seeing news coming out of Reuters doing their OPEC poll, looking at OPEC oil supply. It fell in December by the largest amount in almost 2 years. So maybe giving a little bit of credence to the oft-rumored, oft-discussed, very controversial OPEC cut. Will they, won't they? Will they make it stick? Will players like Russia and others play ball? Well, at least in Saudi Arabia, it's making an impact, and they're reducing their domestic stockpile. As a result, they produced 32.7 million barrels per day. That's down almost 500,000 barrels a day from November, largest one-month drop since January of 2017. So big move to the downside again. That's kind of giving crude a little bit of a lift that maybe this cut, all this talk of cutting, has some teeth to it. I mean, crude's challenge, if you listen to the show, you've been watching crude for a while, you know crude has struggled to kind of maintain that floor, maintain that bottom. It seems to recently have bottomed out around this mid-40s level. Let's see if it can maintain that. Again, the question there is still, of course, how these cuts are going to play out. The domestic supply side of that equation has also been questionable. Not seeing a huge burst there, so that's also been helping to support crude at these levels. Let's look out here and see what we're seeing. Volatility, kind of a mixed bag. Seeing that front contract, which is, again, not vol, it's really gamma. It's only got a day to go. Vol's up strong there, but looking beyond the gamma vol, let's call it that, is a little bit of a mixed bag. Some of the near-term contracts coming off a little bit, longer-term contracts getting a little bit of life out there. It has been an interesting story just from in terms of crude volatility. A lot of people like to watch, of course, OIV, which is the VIX of WTI. That's still hovering around a 54, which has been, if you've listened to this show for a while, spent the better part of 2018 until Q4, really in the 20s, the low 20s. So it still is markedly elevated compared to where it was. I know a lot of you like to look at that barometer, and that barometer still fairly elevated out there. In terms of where the action was this week, it was all out there in the Feb contract, almost 50%, 45% of the volume coming there with 40 puts. Not surprisingly, that's still an area of some consternation dominating the tape here with almost 12,000 contracts going up this week. Again, an even money strike level. Not exactly surprising that is leading the dance. The big print going yesterday, almost 7,000 going up Wednesday and about 2,500 going up Monday and today. Decent chunk of that opening as well, but also a lot of back and forth as to be expected on that strike. Let's look here really quickly at the old skew before we move on. Some other products again we want to squeeze in. I want to give you a nice tight show, but also want to make sure you get a lot of products here as well. And looking at the skew going up, we're seeing the puts are about 2% rich, so that's where the bid is. Not surprising. This is for the Jan contract. That's where the action was this week, so that's where we'll look. This has about 2 weeks left to go as well, so take that with a grain of salt. But then the calls, we're getting a little bit bid as well. So we're seeing the puts, they were kind of pretty much at the money getting bid up. Seeing the calls, they were pretty much even to the at the money as well in terms of volatility. So that skew didn't really have a lot of life to it. And then this week, they are a little bit rich, I should say, to the call. So the call's getting a little bit cheaper, puts getting a little bit richer, but not a ton, 2% either way. So not a huge move in crude skew this week. Let's keep rolling here again. Let's check on our old friends, the equities. You can do that yourselves, listeners. Pull on the drop down, go over there to equity indices. Let's start with our old friends, the Russell 2000. Russell 2000 land, we're seeing, again, a lot of volatility again in the equity space as we're seeing, of course, the continued standoff in Washington. Who will blink first? Which side of the aisle will blink first? No one wants to blink right now. The equity market's hurting. It's kind of silly. We're having this huge fight over $5 billion when we're seeing, hundreds of millions, if not, $250 billion in market cap has been lost in Apple since the height of last year. Not all of that from the shutdown, but of course, trade war, a lot of that exacerbating that. But still, we're seeing huge losses in the broad market space, over $5 billion. It does seem at the end of the day to be somewhat silly. But again, politics often can be silly. We won't go down that road today. Instead, let's just look at the overall impact. Again, VIX hovering coming into showtime, so equity S&P volatility around a 24. RVX, which is the VIX of Russell, 2,000 at about 27.5. So that spread widening out again to about 3.5 points. It was down to about a point last show. So a lot of that kind of depends on the VIX, which is, of course, very volatile in and of itself. RVX does not move as much. The small cap vol does not change as much, even though it is structurally more volatile. The volatility of that volatility, shall we say, not as huge in terms of what was lighting it up out there in RVX this week. OI still decent, even though it's a quiet week, up about 6%, actually, as in Russell 2000 options. Open interest up about 6%. It seems like it was... where are we at? About in 1340 in the Russell right now, coming into showtime. So kind of unched on the week, and we're seeing the 1240 puts kind of leading the dance out here, but not a huge week in either direction really for the Russell 2000. Let's take a quick glance over there at the E-mini, see how it's faring for this week, see if there's any more theme to the paper going up out there. A quarter of the action pretty much this week coming in the Jan week 3 contract, and looks like the 26, actually about a tie, the 2600 calls in the week 3 and the week 1 Jan 2400 puts, both doing about 19,000 contracts. So no clear bias either way in the paper out here. A little bit out of the money and a little bit on the call side, a little bit out of the money on the put side, nearer term. Again, not exactly super surprising out there in equity land. Let's move on to, Nick would be mad at me if I didn't touch on his shiny stuff, his precious stuff. So let's get precious ourselves a little bit of gold, see what the old precious was up to. Of course, this was a week. Gold tends to outperform weeks like this. You're seeing up 10 handles this week. So up not quite 1%, but close to right around the 1295 level coming into showtime here. Again, gold, flight to quality. You got macro concerns. You don't know what the heck's going on with the broad market. You don't know what's going on with a lot of the other commodities as well. Sometimes you head to gold, and that's kind of what we're seeing this week here as well. Gold vol still, and that was one of our themes for last year. Gold vol can't really find life, can't catch a bid and maintain it. And that's kind of what we're seeing here this week. It's a mixed bag. The front portion of the curve down a little bit. The longer term portion of the curve up a little bit. The lion's share of the paper this week coming in that Feb contract, about 37% of the paper, even though the big trade actually came in the March contract. It was in the March 1280 calls with about 7,700 of those bad boys lighting it up this week. Let's see when those are in the money calls now, which is somewhere close to it. So yeah, these are in the money calls. Yes. So interesting. I'm going to guess probably some closing. That isn't indeed the case, though. We're mostly closing on Wednesday. A big print about 6,000 going up there. So someone perhaps overriding and getting the heck out of the way, or perhaps specking on some upside, a gold bug, and they got rewarded perhaps for their efforts. So that was the big trend. Let's look here really quickly too. Let's go out a little bit because I hate looking at actually these have a month ago, so we can look a little bit here for the skew. Let's look at gold skew there in that front contract, which is where the most of the action is, and we're seeing the puts getting a little bit less cheap. Again, this is quoted in terms of the money, the vol, the 25 delta put, 25 delta call versus the at the money vol. The 25 delta put right now, it was 13% cheap. The at the money, now it's about 9% cheap. So coming in a little bit there, and we're seeing the call actually coming in a little bit as well. It was 18.3% rich to the at the money. Now we're seeing the calls only about a little bit 15%. So about coming off a little bit, about 3 points there on the call. So still the bid is to the calls, but not quite as pronounced as it was. Again, not huge moves in the skew either way here this week. Let's keep on rolling here let's go into the ag. So that is ground zero. A lot of you have asked about that. That was one of your favorite shows of last year was the soybeans. Let's go check on the beans, see how our friends the beans are doing. We know this trade war continues to exacerbate things in this area. We saw last month where the first time in a substantial amount of time there were zero exports to China in terms of beans. Are getting most of their stuff from Brazil. So that obviously has not been a good development for American farmers. People hoping that situation comes to an end fairly soon. The beans up 10 handles this week, 910 out there in soybeans land, so just a tick above the 900 level out there. Vol also up, which is kind of interesting, a lot more in the near term portion of the curve, which again, this is about a day to go, so that's pretty much a few-year gamma contract. But beyond that, a little bit, vol still up kind of across the board. So it looks like there might be a little bit of a bid to the calls, and maybe we're ticking into that range. And let's see if it can be confirmed with our skew data. Let's go to the most active month here, which in this case is the March contract with about 45% of the volume going up this week in that contract. Let's see how the skew looks out there. Not a huge change in the skew this week, which is kind of interesting. We're seeing the puts about 2.1% rich to the at the money. They were about a point cheap to the at the money a week ago. So puts getting bid up a little bit to the tune of about 3 points out there, but not huge. And we're seeing the calls, they were about 3% rich to the at the money, now only about 1.6%. So actually we're seeing, looks like a bid to both, a slight bid to both, a bit of a smile going there in the March contract. People don't know where the heck we're going. That kind of is understandable right now. There's concern obviously to the downside, but also interest or speculation to the upside going here as well. So we got the puts and the call, 25 delta puts and calls, not pretty close to similar there. Again, a little bit of a smile action perhaps going up out there this week in the beans. Let's see what the big trade out here in beans land was. It was the March 880 puts. So about 30 handle out of the money puts going up. The lion's share on Wednesday, about 4,600. And about 1,000 Monday and 1,000 today. It looks like unched or kind of a little bit slightly closing on that volume. So a lot of back and forth on that 880 strike in the last couple of days, which is somewhat interesting out here in beans land. But we're still kind of locked in around this 900 level. Once we broke through 1,000, obviously we broke through 900 not too long ago too. Now back above this level. We'll see if we can maintain it. I'm sure that will please a few of the beans and ags fans out there, as well as maybe some additional volume out here in ags land. Again, it's a holiday week, so not a ton lighting it up out here as well. Let's look really quickly before we get into some of your cues out here as well. You guys, by the way, if you're interested in all things crypto, I know a lot of you still are. We'll be launching our crypto trading show tomorrow with our friends, actually, of the aforementioned Acuna Capital over there. They have a very active OTC Bitcoin options desk there. So we're going to talk a lot about that, as well as what's trading in that side of the space. So let's look at the future here on CME and see how that's lighting it up today before we get into some of your questions. Again, trying to give you a nice, tight, encapsulated show here. And you guys have questions about other products, so we'll get to those, I'm sure, as well. You see, looking here at the crypto, the Bitcoin futures at CME, we're seeing about 3,300 on the tape today, with hovering around the 3,740 or so level, off about 100 handles in that front future. Remember, it's kind of been this will it, won't it maintain around 4,000? It breaks through 4,000 to the downside, a lot of hand wringing, breaks back up to the upside. Yay, all is well with crypto world. Now back down it again to the downside, but 3,700, not a huge move out there, all things considered, in crypto land. Remember, we talked about the vol last week, and the vol isn't as big as you would think. It's increased in the last quarter or so, last month at least, but it's not quite the machine of volatility a lot of people assume when they're looking at the crypto land. But still a decent amount of paper out there today. It looks like let's say about 3,500 rounded up there on the crypto futures over there. Speaking of futures, let's get some of your questions. It's time for your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/the Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody. Time for you guys to lead the dance with all your various product queries, which are legion. So let's get to them. Neail P kicks it off. First question of the new year here. He wants us to know, he says, cattle futures are moving. What are the options telling us? So I think this came in right before the holiday, so we didn't get a chance to get to it till now. So it looks like cattle have somewhat settled down, but let's find out, Neail P and everyone else here. The way to do that, of course, head on in to the old quick strike. If you're logged in, listeners, choose the agriculture, then livestock, and let's go to live cattle. We can do feeder cattle too. Let's do live cattle. I'm assuming that's what he's interested in. Let's see how much. I don't think there's a ton of action on those. It's definitely on the live cattle. That's where the lion's share of the business is. Again, this is all relative. It's not going to be compared to the E-mini or certainly to the euro dollars, but it does a little bit. And what we're seeing right now is coming into showtime, we're at about a 123, so off about a handle on the week, or not quite 1% out there. The futures are right around 123.20 or so. We're seeing vol, again, a bit of a mixed bag. Front portion of the curve bid up, longer term portion of the curve kind of coming off. Again, we don't talk cattle every week, so I don't know if that's a regular structure out here, if that's kind of just what we're seeing out here. Cattle tends to move to the beat of its own drummer out here, but it's always a fascinating product. We get asked about the hogs a lot, not as much about the cattle. Hashtag cattle love this week, perhaps. And let's see what we got here from a vol perspective. The most active contract this week was the Feb contract with about 36% of the paper. So let's go out there, see what the volatility is up there this week, about 1.5 or so. In terms of the skew, that's where we like to look. It's changed a bit, actually, here. Last week, the calls were about 6.5% cheap to the at-the-money. This week, they've come in. They're only about 1.5% cheap to the at-the-money. So they're getting maybe a little bit of love out there. And we're also seeing the puts were about 5% rich to the at-the-money, now only about 3%. So calls coming up, puts coming in, skew maybe rotating, evolving a little bit out there in the Feb contract. The big trade out there this week is the 120 puts, which looks like near-term at-the-money put hedging, about 1,000 contracts going up there. Again, we don't talk the cattle every week, so whether that's regular paper seems pretty regular, but most of that went up on Monday, by the way. Other than that, not a heck of a lot. Crazy stuff lighting it up out here. So what are the options telling us? Not a heck of a lot. Skew's evolving a little bit of a bid to the upside, as we're seeing, even though the futures are off this week, but not a huge swing either way, and not a lot of prints going up this week. So kind of a quiet holiday week out here in the cat. I wish I had more for you, Neail P, but that's what the options are telling us here. J Tomas wants us to go back to what we were just talking about. J Tomas wants to know, he says, what do you think about soybean put skew here? Are they still biased towards the downside, or has the concern mitigated any call love going forward? Well, we kind of just did this over there in the beans, but as I mentioned, it wasn't huge beans craziness out here this week either. It was the March contract in this case that we were talking about. And yeah, the calls are about right here in that March contract where the 45% of the paper went up. In the beans this week, we saw the calls get a little bit more bid, about 3.5% versus about 2.8% last week bid to the at-the-money. Puts almost unched, not a huge deal. So we're seeing bias, at least in this active contract, the bias is to the upside. We were talking about some other contracts where it's a little bit more muted. Again, you got contracts going out in a day or so where the puts have a little bit more interest out there. But in general, in that most active contract, 45%, there's a slight, ever so slight bias to the calls. But it seems, like I said, like we mentioned other contracts, it seems almost like a smile. We were talking about the Jan contract before too. It seems almost like a smile out here where they're not quite equal, but the puts aren't super cheap. The calls aren't super rich. There's a lot of concern either way. They don't know really where this thing's going, but if they think it's going to move. But again, they're not super bid either. So it's a weird scenario out here in beans skew limb. I have to get the Acuna guys on again, or some of the other guys who trade ags out here regularly to kind of talk about how that shapes up from a historical perspective. Right now, I think we're kind of in unprecedented times in the ags. Hasn't been a while since we've had since we've had an open trade war with China that in turn kills soybean exports to nil. They're kind of in uncharted waters for that. So right now we're kind of showing the skew, kind of reflecting that. Doesn't really know where things are going. Let's see. Any call love, slight call love, but not a ton. Let's see here. DRI saying, thanks for the show. Enjoying it very much. Well, you're welcome, DRI. We do it for you guys after all. We don't do it for our own love. We like doing it, of course, but we really do it for you guys, your questions, your comments, your various legion of products you want us to discuss on the show here. We love all of it. Lee, I'm going to butcher your name. I'm sorry. Leo Radjovic. Leo Radjovic. I hope that's right. Saying, does the stock substitution strategy work the same with futures options as with stock options? Can I still do the fig leaf strategy? Any things to pay attention to between the two? Well, if you listen in live, you heard a little bit of the Options Playbook radio show leading into this program. And that's our buddy Brian Overby there at Ally. And he loves the fig leaf. He coined that name. That's kind of his favorite strategy. We talk a lot about stock substitution these days, but it's future substitution as well. It works for any underlying that you think maybe it's been a little bit beat up, is maybe poised for a bit of a bounce. Then coming in, instead of getting long, buying the underlying, you could use the options to get long equity, long underlying exposure at a much more attractive rate and put a lot less capital to work doing it. That's why the stock substitution in and of itself is popular. We talk about it a lot. We're talking about it a lot right now, actually. Usually it's done somewhere in the 6 month to a little bit longer year, sometimes out to 2 year time frame. I like it in that 6 month to a year range, but to each their own. Usually 65 to like 75 delta seems to be kind of the sweet spot for that. So going out 6 months to a year, 65, 75 delta is usually what we see. But again, to each their own. People like all different flavors of this. What he's asking about the fig leaf is kind of a kicker to that strategy. You're paying that money for that call. Now, what do you do with it? You can sit there and let it watch, and decay won't kick in for a while because it's a longer-term call, but it will decay a little bit. So what do you do to offset that? Well, you can do a bunch of things, including some people call it a synthetic covered call, even though it's not really covered. Some people call it a poor man's covered call. Again, not really covered. Brian likes to call it the fig leaf because you're partially covered, which is you write a nearer term out of the money call against it. So you have a deep in the money call longer term, and you're selling, could be a weekly if you're very active, or maybe a monthly, probably more reasonable for people out there to sell a monthly covered call. Now you have some income to offset that outlay for that call you have. And remember, as long as you're okay with what you have to do if you get close to that strike, because you're not entirely covered really. So as long as you can deal with that, either rolling or closing it out or doing some other things, if you're okay with that, then this is an interesting strategy for you, and it pays off in the long term. So his question was, that's a lot of setup there. His question was, does it work the same as the futures? Yeah, primarily. The short answer is yes. The longer answer is, again, there's a little bit of nuance there. One of the first things you probably have to be aware of when you're doing it on futures options versus equities. Obviously, straight up equities, there's no expiration to the underlying. It just goes and goes. That's why people like to be long-term stockholders when it goes against them, because there's really no time horizon for them. Futures, different ballgame. They expire. Your options are on a future that's going to expire. So bear that in mind. Make sure when you're looking at the options you want to use a stock substitution, it's on the actual contract that you want it to be on. Sometimes people new to the futures option space forget to do that. Very basic, but very important step. The other thing, a lot of equity is going to have a dividend income stream that factors into the price of the calls. Different beast with the futures, obviously. Sometimes people have a little bit more reticence because of that, because they're missing out. Obviously, if you're long the call, you don't get the dividend income stream that you would with the stocks. That makes them lean towards the call or towards the stock. Obviously, the call is going to reflect that in the price as well, though, but something to bear in mind. Not as much of a payment stream you have to worry about unless you're looking in the equity space with a lot of the futures. So those are kind of two of the minor nuances you have to pay attention to. But otherwise, yeah, it pretty much works the same. If you have an underlying that's beat up, maybe it's the equity indices, maybe it's crude, whatever you feel has been beat up and you want to get long it with an attractive level of capital outlay, mitigated risk. The nice thing about it, we have all the things. You buy the underlying, you kind of just have delta. Those are Delta 1 products. They're called that for a reason. If you go the option route, you have a mitigated capital outlay, much more leverage, and you have, of course, the Greeks working for you. Now you buy a lower delta, so you're not exactly moving one-to-one with the upside of the stock, but it'll get there if it moves enough. And then, of course, to the downside, you're losing money at a lower rate, which is nice. You also have volatility kicking in. You have a Vega component to the option that you don't really have with the underlying. So that Vega will kick in to help slow your rate of loss. You won't make money to the downside, obviously, but you won't lose as much as if you own the underlying either. So it's a very attractive from that perspective. That's why we like stock substitution in and of itself, or future substitution in this case, and then adding in the kicker of the fig leaf. Call it what you will. Synthetic covered call, whatever the heck you want to call it, is still yes. Short answer, yes. It does work pretty much the same, aside from those few caveats. You probably could spend a whole episode talking about those caveats, but you can still do it out there, and it's worth your time. Let's see if you have any other. Got to wrap up soon. Got any other quick ones? You guys have really taken us all over the place with different products here today. Seasonal corn trading tips. I don't know if we have time for that one here. Brent WTI. We'll save that when we have a longer deep dive for all things crude. Secrets, does the skew hold for WTI right now? We kind of went over this one a little bit too. Where there's not a heck of a lot in the skew out there right now. We'll do it really quickly. We'll review it again before we have to call it for this week. Listeners, again, wrapping you up in a nice tight bundle here on TWIFO this week. Let's go out here again. WTI is where we're looking here on the quick strike. For those of you playing along, the most active contract is the Feb contract. So we're going to look out there again really quickly. And like I mentioned, there's not a huge, the calls and puts are actually, you got the puts about 2% rich, the at the money calls 2% cheap. So slight bias to the puts, but ever so slight. What secret does that hold? Where is skew headed? Well, you can see from that there's a slight concern to the downside, which I don't think will surprise anyone who's been following crude for any period of time. The question has been for a while now, can crude maintain these levels? Are these cuts actually real? Or is it going to be just another bunch of people hand-wringing and OPEC not delivering on their cuts, in which case we're going to see crude plummeting to the downside? So the concern, naturally, still to the downside, slight bias to the puts as a result. I don't know if I'd call myself a WTI skew swami. Easy for me to say, skew swami. There we go. But we try out here on the show. Great questions, everybody. Keep them coming. We'll save some of the longer ones for our next show as we roll on into the home stretch. All right, that is going to do it for this nice tight kickoff to the new year out here in TWIFO. Trying to get you in around the 40-odd minute level or so here for the show. Get on with your business, get some questions, get some products, get some guests, usually when they're not sick or when they're not traveling. But thanks for joining us here. We know you love your kickoff shows to the new year, so hopefully you're enjoying this one. Hopefully next year, a year from now, we'll see this one at the top of the charts as well. If you have questions, products you'd like us to consider on the show, you guys send them in all the time. Keep them coming. You know how to find us over there at Options on the Twitters and the Stock Twits. Or, of course, you can hit up folks like CME and others. They'll forward them to us. Maybe the folks at Russell over there as well. Let us know if you have other categories or things you want us to analyze on the show. We're happy to do that. Again, it's a huge, broad offering in the futures option space. And so sometimes, this show could easily be 5 hours long. We try to hit the salient points for you here on the show. But, yeah, there's always a category or two we could add. So let us know. Maybe you want to see something obscure come on the show this week. Let us know. We did the cattle this week, so yeah, it gets pretty obscure. We'd like to oblige you guys. Hit us up. Questions, comments, insights, product recommendations, all that fun stuff. You know where to find us. And before we go, of course, you can find more of this good stuff over there at cmegroup.com. They have links to the show. They have a lot of great research from Blue and Eric and their team. I think they have some stuff out there about buying the dip and all the other things right now. Good research always coming out from their team over there. And of course, like research, and you're in the equity side of the space, you like looking at how this stuff plays out volatility wise, buy rights, how those things are working out, maybe active, passive, all that kind of stuff, benchmarking. The folks at FTSE Russell have you covered over there, FTSERussell.com, FTSE Russell.com, also over there on Twitter. Give them a follow if you haven't done so already. They tweet out a lot of good data throughout the week, not just when they're on this show usually, or traveling in this case, this week. And of course, last but not least, our buddies over there at Quick Strike, Mr. Nick over there and the team working on a lot of cool stuff for the new year over there. We'll keep you informed about that. I think we got some new fun stuff coming for you guys on the show as well. So we'll stay tuned for that. Should be kind of interesting. In the meantime, check them out over there at bantix.com, BANTIX.com, or quickstrike.net. I've said it before, I'll say it again. If you're watching this stuff, if you're listening to this and you're not using that platform, it's hard for you, I would think, to find the data you need at a reasonable price. So check it out, quickstrike.net, without the C, QUIKSTRIKE.net is the place to go. And on behalf of Nick and Sean and our friends at CME and indeed myself, I thank all of you out there for downloading, streaming, subscribing, sending in your myriad questions. Keep them coming. We love to hear from you. And we'll see you next week for more of This Week in Futures Options.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.